Hello, traders. Gary Wagner here, 11:50 in Honolulu, 5:50 in New York on Thursday, 13th day of October 2022, and this is the daily report for gold and silver. Today, the government released the most recent inflationary data vis-a-vis the CPI for September. The Federal Reserve predicted it would show a slight downtick from 8.3 to 8.2%, while the economists polled by various news organizations were expecting it to be reduced a little bit lower, down to about 8.1. In this case, the Fed was spot on. But what was very worrisome is the core CPI, which strips out food and energy, actually ticked up from 6.3 to 6.6% year over year. And that is alarming. And that is why, according to many analysts and the CME's FedWatch tool, they are now predicting that the Federal Reserve will raise rates by 75 basis points at both the November and December FOMC meetings. If they do that, it would be 5 consecutive rate hikes of 0.75%, something we haven't seen since the 80s. Now, the reaction, though, to that news, I believe, was a little perplexing. And what I'm speaking about is the fact that we saw the dollar decline by about 0.75% based on that news. And this occurred concurrently with rising yields in the 30-year bonds, as you can see up on the screen, as well as on the 10-year notes. Both of them had higher yields today, and that to me is interesting. That being said, gold did what we would have expected it to do, with a slight uptick in the core CPI numbers today. Gold currently down $5.10, $1,671.90, and it is currently trading in Australia, which is why it is different from the price we reported at the beginning of the show. You can see that as this small dashed line coming in below the New York close. And today's decline in gold can also be viewed through a 3-line break chart, which is projecting more pain, meaning more downside pressure in gold, with a minor level of support at 1,670. However, when we look at our long-term studies utilizing a Fibonacci retracement based upon our weekly charts, it begins at 1451 up to the record top this year, which is 2078. So it's an extremely long data set. We've got major support just at around 1,600 per ounce, about $10 shy of that, which is why I remain bearish and have a neutral stance until the Federal Reserve begins to slow down on their interest rates, or actually begin to become accommodative rather than hawkish. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.